Hey guys, what's going on? It's Rekt Capital and welcome to this exclusive Bitcoin TA session post Lunar crash where I'm going to be sharing my opinion about the market, but also the level-headed insights that come along with some data science metrics, some valuable price action indicators, and so much more. I'm going to be sharing with you in this exclusive brand new Bitcoin TA session, which is going to be exclusive for paid premium members of the Rekt Capital newsletter going forward, but this edition is going to be free for everybody to view. I'm going to be sharing my insights, so let's dive right into it. This is the 200 moving average. So the 200 simple moving average on the weekly time frame is a valuable gauge for preceding bear market bottoms, and you can see here we saw some support at this 200 SMA with wicking to the downside below it. Of course, we also saw a accumulation range form at the base of this moving average, an ascending triangle in fact at a higher low before we saw a breakout towards the upside. March 2020 downside deviation beyond, or at least below, this moving average, and now we're seeing price getting relatively close to this 200 SMA once again. But of course, we still need Bitcoin to drop from current prices by 25% at least. And I say at least because to contact this 200 SMA, Bitcoin needs to drop 25%. But we also see downside deviations below this moving average, and this is where things can get really panicky. And of course, we see downside wicks, but even here in this March 2020 period, we saw a candle close below this moving average, which is what really triggers the traders and the bargain buying investors that this might actually fail, that this indicator might fail. But this is going to be most likely. Should we get there, of course, this is going to be the fourth contact in history. This being the first, second, and third. These are the three pinpoints in history where we've seen bear market bottoms essentially form and then reversals towards the upside. So this is one indicator that's worth noting and worth watching. But what I want to talk to you in this video about is how do we narrow that down? How can we understand the price action of Bitcoin a bit more? Because if we touch this 200 weekly SMA, then 22, 23K would be that bottom. But what if we indeed do downside deviate? What could we expect then? This is what this video is partly about, because we're going to be tying in some indicators just to give us more of an idea as to where that downside deviation could take place. And these are two weekly moving averages. This blue one right over here is now the 50-week exponential moving average, and this is the 200 EMA. And you can see just from this black 200 EMA, yes, we do see bottoms at this 200 EMA. We also see downside wicking below it. But of course, at the same time, we see accumulation ranges form below the 200 EMA and downside wicking as well. So when comparing the exponential moving average with the simple moving average in this chart, you can see that the simple moving average is a better predictor of just holding as a base for bear market bottoms. The 200 EMA is a good indicator for just giving us an idea that on or below around this EMA is where we see the point of maximum financial opportunity take place. But in any case, these two moving average, the 50-week exponential moving average and the 200 EMA, you can see that whenever we see breakouts beyond the 50-week moving average, that's where we see upside potential, we see macro uptrends. But when we lose this exponential moving average, the 50-week EMA, we tend to drop towards or even below the 200 EMA. And you can see that right over here, this denoting the uptrends for Bitcoin in a bull market. We tend to see this EMA hold as a support. Here in particular, of course, here in this period, we downside wicked towards the 50-week EMA, but not actually touching it. Turning it into support is really important. And this is actually a chart from late May, so we're going to see an update to that chart in just a moment. Really important that we see those support tests for the 50-week EMA, but we're going to be focusing more on the downside because, of course, upside is great, but we're past that cycle, that part of the cycle at least, and it's important to now watch out for this 200-week EMA and what it could potentially give us in terms of an indication. Are we getting close to a bottom? Are we downside deviating below it? Is it important to continue watching it? So you can see downside deviation. Actually, the candle close here below the EMA is more pronounced at a much lower level below the 200 EMA compared to the SMA that we spoke about earlier in the video at the very beginning. Accumulation ranges forming below the 200 EMA. Now this is a chart from June 1st, and of course we were touching the 50-week EMA holding support here, but this 200 EMA was always going to be a factor should we convincingly break down from that. And you can see that at that point in time, the 200 EMA was around 17K, 16K, but over time, of course, it's been a year since that chart. We have seen this EMA mature a bit and actually get closer towards the 25K region, which is where we actually tapped most recently. And you can actually see this is the most recent price action. And if we just go back to that June period, this is where we were in the previous chart. So let's go back to that chart very quickly. June 1st, around early June, we found some wicking to the support, fake breakdown, and then a rally to new all-time highs, but then support test and a breakdown from here. You can see that this is now a resistance. Fake breakout beyond that 50-week EMA, no support test. In fact, a resistance check here. So this 50-week is definitely a resistance right now, and we've dropped towards the 200 EMA. Wicking below it briefly, but we have to understand that looking back on these charts, you can see that the 200 EMA isn't necessarily the bottom for a market, bear market. In this case, we tend to see some sort of accumulation range or downside deviation below that 200 EMA. Hence this green box. And of course, this green box isn't to scale. We could see this green box be even as wide as this. This green box is only supposed to showcase that this is the moment of a area which has preceded an outsized ROI for long-term investors. So accumulating here historically in the analogous situations has been a very decent strategy for long-term investors, whether that was with this upside or even that upside. So going forward, the EMA, the 200 EMA, definitely worth watching for, specifically should we see a breakdown below it and some sort of consolidation, some range-bound movement below it, some sort of volatility, because at the moment, yes, we saw a high sell-side volume candle, but this sell-side volume candle, as I've been mentioning in the Rekt Capital newsletter, we're seeing a declining on sell-side volume candles. This sell-side volume candle was quite high, but it was higher than this sell-side volume candle. And this is, of course, much lesser in sell-side exhaustion compared to these periods. And in fact, are we seeing is this EMA weakening? We've wicked in here, but we haven't really seen any follow-through. Of course, when we see strong downside wicks, it's important to watch out for a range, but this range could still also form over here. And this needn't be the exact bottom. That can be only an attempt to fill this liquidity here. But depending on how we bounce and reverse from here, that's going to showcase whether this is actually a weak area. And history suggests that this should be a weak area because we tend to see some accumulation below the 200 weekly EMA. So we've established that it's really important to just watch below the 200 EMA, historically speaking at least. So let's have a look at these two EMAs, the 50-week EMA and the 200-week EMA. And let's change it to the daily time frame, so the 50-day and the 200-day exponential moving averages. And this is actually what constitutes golden crosses and death crosses. And a year ago, roughly speaking, I posted a thread on Twitter talking about death crosses and what they tend to precede. So let's update that analysis. And I'm just going to run very quickly through it because death crosses tend to happen once we've seen some retracement initial retracement. And in the 2013-2014 cycle, we saw 73% retracement before the death cross actually occurred, but we were already in a bear market. And if we just focus on that death cross happening, we saw 73% retracement happen before the death cross, but after it, we still saw 71% extra. So you see some mirroring there, right? Pre-death cross, 73% downside. Once the death cross happens, you see 71% downside. So 73 minus, or at least versus 71% downside pre and post-death cross, quite some mirroring there. That's an interesting tendency. Let's focus on the 2018 death cross, 70% downside. Death cross happens, and then we see another 65% in downside afterwards. So once again, some mirroring, 70% downside pre-death cross, and post-death cross, 65%. So 70%, 65%, quite similar numbers when comparing those two periods. So let's focus on 2019, and this is where things get a bit murky in terms of the death cross, and this is where the death cross in general has had a lot of criticism, because in 2019 we saw downside of 53% until the death cross happened. But you can see that this death cross happened here, golden cross, death cross again, and then golden cross. Before we got that first death cross, 53% downside already happened. And once this March 2020 death cross happened, well, we'd already seen a strong crash, 55% towards 3K. So still, by standards of just mirroring, this death cross right over here, pre-death cross, 53% downside and 55% downside, but this actually happened before that death cross as well. Still, some mirroring, quite interesting, but nonetheless, this invalidates that mirroring in some way, because this figure happened prior to the death cross, because this EMA crossover wasn't quick enough to happen earlier. So some invalidation, but nonetheless, some mirroring. And in this case, the death cross actually denoted the generational bottom at 3K. So not a good indicator to time your entries by any means, especially when things are this volatile, where we see a V-shaped reversal into a new market, bull market, macro uptrend. So going forward here, 2021 is when we saw the next death cross happen. We saw 53% downside, but when the death cross happened, that also marked the bottom, much like it did in March 2020. So yet again, this death cross isn't very good in timing those bottoms, because once that death cross happened right over here, we pretty much reversed into a 120% rally towards the upside. A golden cross happened afterwards. So 120% move to 69K. Once that death cross happened, the death cross preceded a bottom, much like in March 2020. At this point, it's very easy to get skeptical about the death cross, but let's still think about history in general. What does the entire price history say? Of course, twice in history, we've seen the death cross precede a market bottom. But of course, in the past, we've also seen the death cross precede similar magnitudes of retracement that we've seen prior to the death cross happen. So let's talk about this period in price action. Right now, from 69K to the death cross that happened earlier this year, we've seen a 42% retracement, percent. 42% retracement. And if we were to just appropriate this mirroring tendency and apply 42% downside from here, then that is an interesting finding, because that suggests to us that 28K is the bottom for this cycle. So that is an interesting insight. Could this indeed be the bottom? And in my opinion, I'm still waiting for the 28K region of the macro range low to give way, because that's the final support holding a bullish bias. We need to break down from that macro range of 28K to 69K. So if this mirroring tendency continues and persists, as a tendency in fact, if it continues to persist, then this Pre-death cross 42% retracement should occur now, and this should be the bottom. But if we just focus on previous retracements post-death cross, can it become a bit useful? We've seen a minus 55% retracement before relative to a death cross. If this is to be the case, a minus 55% retracement, then we get to 22K, which ties in with the 200 simple moving average that I spoke about at the very beginning of this exclusive TA session on Bitcoin, this deep dive. The 200 SMA is going to most likely bottom at 22K. So if we see another period of retracement after a death cross, like 55%, then we could see 22K indeed get hit. So a death cross tendency here is confluent with the 200 SMA weekly moving average, 55% retracement. And this death cross is showcasing that 55% wouldn't necessarily be out of the ordinary. 65% has also happened and would get us to a price point of 17K. 73% would get us to 13K. And of course, the deeper we go, the less likely that sort of retracement could be, because in previous cycles, we've seen death cross figures 73%, or at least after death cross figures 71%, here 65%. And you can see that as we go along in the cycle, 55%, we could be lessening in terms of retracement below the death cross. And in terms of price action, we might be seeing some lessening here. So 53% and then 120. This is the deviation from the tendency. But if we focus on this current period, 42% and then 42% having happened, this could be a testament to the declining nature in death cross, post-death cross retracement. That could be that argument. But if we do lose that macro range low of 28-30K, then that declining tendency is no longer valid. And we should think about those deeper retracements of 55, 65, and 71, 73, but of course knowing at the same time that those deeper retracements are getting lesser and less likely. So let's talk about the monthly perspective, because this is quite an interesting one in terms of finding confluence with the death cross. First of all, the 73% retracement period right over here denotes 13K roughly speaking. And this monthly resistance here is 13K. So that historical tendency of post-death cross retracement aligns with a major support region, should we even get there. But that's, of course, the less likely scenario of them all. And if we just focus on the 65% retracement post-death cross, 17K, which is approximately confluent with another major monthly support region, and that's the 20K region right over here. And at the same time, minus 55% retracement. That's 22K roughly speaking. And you can see that 22K is somewhere over here, right? But the thing about this monthly chart, and this needs to be stressed here because you can see that once we broke towards the upside, this region, 28 to 30K, was a resistance, upside wick, rejection, and then we broke beyond it. But then this region turned into support, downside wicking into 28K, this current monthly support that Bitcoin is currently resting at. It sprung back up, dropped back down, and then rebounded once again. But the problem about this rebound is that it was significantly weaker than this rebound, or even this rebound, this retesting rebound. When we got to this region in mid-2021, we saw long downside wicks, fervent emotional buying. People were crazy to buy this retracement at a discount. Hence that strong rally and even a retest over here of this support region to make Bitcoin go even higher. But once we retraced here, definitely a higher low formed here for many, many months. Premium buying was evident in graphic form right over here. People happy to buy Bitcoin at a premium every time it dipped. But then that premium buying higher low was invalidated, and that psychology that was building for many, many months, giving bulls some reason to become bullish, that was invalidated because that psychology suddenly disappeared, given how strong the selling was at essentially this mid-range. Because de facto, we are in a macro range, range low here, range high here, and this being the mid-range. So until we were able to get on top of this mid-range and turn it into a support, we would have revisited the macro range, but we didn't because we rejected at the mid-range and got back to these levels. So just notice how this support region, once a resistance over here, this support region has weakened significantly in this bounce. And in fact, this support region has turned into a new resistance with this upside wick confirming that. Of course, if we get a monthly candle close like this, then we could see some relief rally back into this resistance, but that would be a relief rally to reject it, unless we're able to monthly candle close above this region just like this or like this to just reclaim it as a support. But of course, we're not even there yet at the moment. We are confirming a breakdown. Of course, let's watch out for that monthly candle close, but a monthly candle close just like this could enable a rebound because we are at monthly support right over here. It could enable a rebound where price could reject and then revisit this blue level and then break down perhaps. But at the moment you can see that this downside wicking, fervent buy side action from bargain buyers wanting to get a discounted Bitcoin, this fervent buy side momentum and pressure is not evident here at all. The sell side is incredibly strong, pressing against this support for the time being. So that monthly close is going to be very crucial, because if we get a monthly candle close below this blue level, well, we've never seen a candle close below that level before, but it won't be good because the next support on the monthly time frame is this 20k region. So that's quite a gap that needs to be filled to develop the price characteristics inherent in these charts, and that's resistances and supports. We don't have any supports to stop the cascading sell side acceleratory momentum that would occur once this monthly level, this blue 28k level, is lost. Nothing to support that in this region. And of course, in this region is where 22k resides. So the weekly SMA, the 200 weekly SMA, is somewhere lurking here. So that's quite interesting. The last thing I just want to talk about is the 13k region. Is that a possibility at all? And one argument for that would be, of course, you'd need to stretch and get the deepest post-death cross retracement, which happened earlier in price history, in Bitcoin's history. It was a much more volatile asset then, smaller market cap, different market conditions, different levels of adoption, very much different in all cases, in all shapes and form. Could you appropriate this to current market conditions? And that is a bit of a stretch, but for those wanting to make that case, if we indeed break down from the blue level, this 20k region could get tapped. It doesn't have to be tapped because the 200 SMA is in this range right over here, inside this relatively wide range, which could see price gain some support there at the 20k, 22k region, whether we see some downside wicking into the 20k region below that SMA. That could also happen. But if we break down from here, and the people who think that 13k is a possibility, one could argue that this wicking resistance, which could be a support in the future, is just that. It's a wicking resistance, and that's on most timeframes, most higher timeframes, that we see an upside wick into 20k. And wicking supports aren't very often strong supports. And that's where those people could make that argument. Of course, here we have a candle close below 20k, so that could actually facilitate more support than if we just had an upside wick here. But generally, this would be a very strong support given how we have 2 monthly candle closes at this 13.9k region on top of a upside wicking wick into this level, on top of yet another monthly candle, and then a candle close to retest this level as a support. So indeed, 20k also has a candle close below and a retesting candle. So in fact, you could actually argue we are discovering in this session that this is reasonably a strong support. Maybe not as strong as this support right over here, but nonetheless, it does have a few notable valuable contacts here. So at the moment, breaking down from 28k, 29k roughly speaking, we enter this range where the 200 SMA resides, and this being the next range after that. But in all likelihood, we might not see these lower figures right over here, especially since most people will be saying that, well, 20k won't be tested because previous all-time highs weren't tested in the past. But what didn't happen before, does that necessarily mean that it won't happen in the future? And this market tends to surprise us quite a lot, so we can't rule that out. But what we need to be certain about is that Bitcoin is entering a period of outsized financial opportunity for those who have historically started to dollar cost average at similar periods in the past. And similar periods in the past are periods such as what we've seen on a 65% retracement post-death cross, on a 73 or at least 71% retracement after the death cross, 2015 consolidation. So you can see that this is worth noting. It all comes back down to this SMA. But of course, the death cross analysis gives us a bit more insight into the particular levels that are worth watching for should we get that sort of downside wick. And those levels are 13k being the deepest, 17k and 22k, which is where the 200 SMA is residing at this point in time. I hope you've enjoyed this exclusive Bitcoin TA session. I hope you enjoyed it. I hope you found it educational. We've coupled together a few indicators and looked at Bitcoin's price history through the lens of death crosses, pre and post death crosses, those retracements, but also the significance between the 200 SMA versus the 200 EMA, and how we see accumulation ranges form at the 200 SMA with some downside wicking below it. And relative to the 200 EMA, we tend to see these ranges form below it. But nonetheless, those moving averages, as well as the crossovers of these moving averages on the daily time frame between the 50 and 200-day exponential moving averages, those give us great insight into what to potentially expect going forward. And these are great levels just to understand that they are very close to key major monthly support levels on the monthly time frame. In any case, I hope you enjoyed this brand new exclusive Bitcoin TA session post Lunar crash, where I spoke about some key levels to watch out for going forward. Feel free to sign up to the Rekt Capital newsletter in the link in the description down below to stay tuned for more deep dives like this in the future. just a sneak peek. Going forward, I'm going to do a similar deep dive on altcoins, which will be exclusive and just for members of the Rekt Capital newsletter. So stay tuned for that. Feel free to sign up today. That's about it for today's deep dive. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.